High inflation and the rising chance of recession have investors scrambling for cover, and sources of positive return may seem few and far between. However, some segments of the equity market have outperformed, and we think they are poised to continue to do so, even amid inflation and potential economic contraction. Let's take a closer look. June U.S. inflation hit a blistering 9.1%, the highest in 40 years, causing investors to assume significant Federal Reserve rate hikes over the next several meetings. While these hikes may help curb inflation, we think that they will also slow economic growth or possibly trigger recession. Bloomberg gauges the likelihood of a recession in the next 24 months at 99%, with some models of leading economic indicators suggesting a contraction has already begun. We are more sanguine. We estimate the recession probability at 50%. With this backdrop, it's not surprising that stocks that are in better financial condition, pay dividends, aren't overly expensive, and have lower risk may be more likely to outperform the broad equity market. These stocks, which we label high quality, dividend yield, value, and low volatility, have historically outperformed during economic slowdowns and contractions. In fact, they've had some of their best performance in times of economic contraction when the dispersion of returns among equities is at its widest. These same segments or factors have performed well in the 6 high inflation periods the US has experienced dating back to the 1970s. More importantly, all of these factors have outperformed in the periods between peak inflation and the return of inflation to the long-run average, a path we'll likely be on soon, if not already. Growing economic uncertainty has caused most major asset markets to retreat. While high inflation is here and recession is increasingly likely, there are bright spots in the market. Now is the time to focus on company characteristics, financial quality, yield, value, and volatility. We believe that doing so will better position your portfolio for the turbulent ride ahead.